What's up, outliers? Trading week look ahead. We got a couple things I want to run through, just calendar events, what's happening, take a quick look at the futures in general, and then I'm going to pop over and look at GameStop in depth to see any activity to keep an eye out for the coming week. So let's dive straight in. First thing here, futures are open. They're moving around just a little bit. The E-minis are up 0.18%. The Russell and the NASDAQ up both originally about a quarter point. Now they're oscillating. The Russell's at 0.2%, NASDAQ a little bit above that. The VIX is down essentially half a point. Bitcoin unchanged, gold up 0.58%, and crude oil up a quarter point. So what are we seeing so far? This looks like a little bit of a chilling out. Again, it's really important to understand that the futures open is not necessarily that indicative of what it will look like tomorrow during the actual open market, but it gives us some ideas, specifically if there are extremes, but there's no extremes here. From a look across the different indices, though, there are some extremes. We can see that the NASDAQ has been punished definitely more than the E-minis, the S&P 500, and the Russell is just kind of doing its own thing. It doesn't give a crap about what anybody else is doing. And it looks like it's actually wanting to open up even higher than where it closed on Friday. So small caps still showing strength. And yeah, there was a big change here in the percentage of S&P 500 stocks above their 50-day moving average. Now it's at 69.2%. I like to keep an eyeball on this figure. It's kind of like a breadth indicator for the S&P 500, along with what I like to use for the market writ large is this here, net highs and lows. And you can see that for the NASDAQ, interestingly enough, even though it's getting punished to the downside, we're actually seeing a collapse on gross lows, on gross highs, and net highs is expanding. And to correct what I just said, the gross highs is expanding. So we're seeing a collapse specifically in gross lows. So that kind of is interesting, right? Because if you think about it, the NASDAQ itself, we can use QQQ as a bit of a more commonly used proxy. It doesn't look to align with this, right? Like, I mean, just take a look at it. It's fallen off a cliff, yet as it's falling off a cliff, it still has reasonable highs. And so what's going on here? Well, it tells you pretty clearly that there are a handful of names dragging this down that have an outsized impact in the index, which we kind of know those exist. I don't think that's a giant shock to anybody. But if we take a look at the NASDAQ, you can see some of the bigger names in here. If they don't perform well, that entire index, even though the majority of it might be hanging out doing its thing, the rest of the index doesn't really matter that much. It's being pulled by the primary leaders there, which is interesting. So I find that in and of itself somewhat curious. Now, let's take a look specifically at calendar week ahead, what events we have coming up. And it's a little bit of a slower week. So we essentially have nothing tomorrow other than some earnings. So there's McDonald's earnings. And then I think there's the Dallas Fed meeting business index, nothing that I care too much about. Starting on the 30th, though, you'll see that we have the HPI composite. I don't think that matters too much. The house price index I care about just because I like keeping an eyeball on the housing index and how it's behaving. Consumer confidence I also care about for the same reason. I don't think either of those are huge impacts. JOLTS job openings will be a bigger deal. And because just this unemployment, anything related to employment right now is an important indication of overall economic health, which obviously directly feeds into things like how the market is going to perceive the impact of inflation and the health of the economy. Then on the 31st, we have Chicago PMI, which I do care about. We have pending home sales, crude oil inventories, those kind of standard things. And then the belle of the ball on the 31st, we have the Fed interest rate decision, and we have the press conference, the rate statement. Then on the 1st, we have manufacturing PMI by S&P and ISM, the balance sheet on the 1st, unemployment stuff on the 2nd. Now, I want to take us back up to this, specifically the rate statement. And I want to take a look with you all at the Fed Watch tool so that we can see right now what the market is pricing in for this upcoming statement. And it's looking like overwhelming probability of no change with a slight existence of an ease that's actually ebbed and flowed. It's gone from 1033% chance down to 413, up to 62, down to 413. Now, this is interesting because if we take a look at the overall probabilities, we're running out of time for multiple cuts. And previously, there was actually a stacked cut here that's now gone because we're running out of time. And what this is showing me is it's overwhelming probability of no cut on the 31st. Then on the 18th of September, this is down to 87.7. This was much higher. And this is also down quite a lot on 7 November to 63%. So the market is guiding down this expectation of a cut pretty significantly, but this still is showing a cut here in September, here in November, and a slight edge to a cut in December. So that's 3 cuts in a row that the market is expecting to see. So we will have to see how that goes, TBD. What I can tell you is that if the market starts getting punched in the mouth in terms of its expectations of a cut, I fully would anticipate things like small caps to start chilling out quite a lot. Unfortunately, not exactly what I would want to see, but it is what I would expect to see. Now let's take a look at GameStop. And there's a few things in here that I would like to draw your attention to. We did a pretty long live stream yesterday about more of the background, took a look at some Roaring Kitty stuff, some different due diligence, which is super fun. Really enjoyed that. And now I just want to focus a little bit more on the options chain because obviously price hasn't moved since I've made the last couple updates videos on it. It's hanging out pretty static here. Obviously market's closed. So let's take instead a look at the options because there are a couple big changes that have happened. Now, the first thing I want to show you is over here. The call OI is down to 569,000 giggity. And the put OI is at 347K. So as I was talking about during the live stream yesterday, these are converging a lot, way more than I've seen them in previous time. Generally speaking, I see way more call OI. This generally tells me I think we're coming into a bit of a quiet period. The other thing that I noticed that has changed is the 16 AUG expiration cycle used to have higher vol than these, and now it's actually lower. That's slightly interesting to me because even towards the end of last week, I would have expected this 2 AUG expiration cycle IV to pick up, and it didn't. And now it's just starting to catch on, which I find that, again, slightly topical because I really believe that the 16 AUG is going to be way more active than everything else we see here. And again, a lot of that just comes from a liquidity and a market mechanics perspective. The weeklies are just not going to have as much going on in them, and we can take a look at that. 2 AUG right now has 71,000 calls, 34,000 puts. 9 AUG, 26,000 calls, 9,000 puts. 16 AUG, 201,000 calls, 109,000 puts. So that's my point. These front 2 expirations combined still aren't essentially half of what you see in 16 AUG. So that's very normal. I don't necessarily read into that excessively. There's no reason to. But if we take a look at the 16 AUG positioning to start getting an idea of what the market's looking at, the 125s still off the chain. Lots of I don't even want to call it speculative transactions there. It's just kind of a mix of things that I think go into this specific strike. But there's 40,562 OI there. And then the rest of the distribution is kind of mixed. So we do see the bigger strike right now looks like the 30s to me. And then after that, it'll be the 40s. And then after that, it looks like essentially a tie almost between the 25s and the 100s, very close to one another. And then after that, the 50s and so on and so forth. So this is where we're seeing some centralization. Now, looking at this coming expiration cycle, the one thing I want to point out that is interesting to me is we are seeing layering of these near out of the money strikes. So you can see that there's 1100 OI here at the 24 and a halves with 2800 incoming volume. So that will get built up. Same thing here at the 25s with 15,000 incoming OI. This is also going to get built up. The 25 and a halves, 1690 against 1,000 OI. This is also going to get built up. And this essentially holds true almost all the way through until you get up towards 30, which is very interesting to me. Now, unfortunately, I'm not convinced that there's enough here to really, actually, Newton just shot me a text. Shout out to you, Newton. But there's not enough in here right now to lead me to believe that we are, escape vector shooting up and out. But this does create a little bit of an interesting potential market behavior, because as these front options fall in the money, the market maker is now incentivized to purchase those shares to hedge their position in expiration so that they can deliver. And you'll notice that as each one gets triggered, there's kind of another one with at least some OI that would cause some buying pressure. And that is essentially a mini version of a gamma squeeze. Now, a real gamma squeeze is if these were really, really loaded and it just shot this thing up and out. But the other problem is obviously with the at the money offering, I don't necessarily think that we're in like a really difficult liquidity environment. You can see that up here, right? It's even flagged as easy to borrow. There's plenty right now shares available to hedge the product, which makes it obviously a little more convoluted in order to pursue something like a gamma squeeze. It still could happen, but it's just a much harder environment for it to occur. So that's what we're seeing so far. As always, anything you want me to take a look at, let me know. Be an outlier. I'll see you guys later.